Okay, so welcome back to another video. In this lecture, we are going to understand the concept of order pairing. It is the market deception to trap the retail traders such as breakout and continuation traders, those who follow the trend whenever a swing high or swing low is broken. We are going to understand the difference between mechanism and manipulation with the help of this concept. So let's dig right into it. First of all, let's understand what is order pairing. It's not about finding a buyer or seller, it's about creating one by feeding others' belief. Order pairing is the method by which algorithm deliberately triggers opposing orders, such as buy stops or sell stops, to create the liquidity required to fill institutional size positions. It's actually a form of deception that algorithm plays to manipulate with the beliefs of retail traders. It will spike up to high or low, just to reverse and give the institutional trader position and trap the breakout and retail traders who were expecting price to continue the trend by breaking a swing high or swing low. It is to collect the orders from one side of market and pair them up with the other side. It's not the manipulation, it's the mechanism. A mechanism on which the algorithm creates the cycles of price action, which helps it push the liquidity necessary to fill the institutional size positions. You are not just watching price move, you are watching orders being hunted and fed simultaneously. Both of these things happens whenever the market is in a volatility and is moving up to high or low. It collects the order from one level and then pair them up with another level in the opposite direction, from buy side to sell side and sell side to buy side. Liquidity isn't naturally found, it's manufactured by triggering your emotions. If you have been with me long enough, you now know that algorithm is designed to play with human emotions and it know exactly how to do it. So if you are not paying attention, if you are not focused, this will play with you and this will hurt you so bad. So understanding the concepts of order pairing and algorithm and the mechanism of market helps you put the necessary skills to be cautious and not to let your guard down every day. Every aggressive move is an invitation, not a direction. Now, if you focus, I haven't written it as an execution. It's an invitation that price is going to either reverse or continue after manipulating enough traders into that aggressive move. So, it's an invitation. You don't want to follow the aggressive move right when it's happening. You want to wait for a proper position after order pairing has happened. The trap sequence, the spike that excited you, was never the trap. It was the trap to pull the trade. In a bullish market, the algorithm will take sell stops with a spike to trap retailers and then target the buy side to pair orders together. So we are taking the sell stops below a low and then we are going to go high to pair them up with the buy stops. In a bearish market, the algorithm will take the buy stops above a previous high and then pair them up. Market does this to be ensured that only elite traders get what the true move will offer by liquidating all the retail orders and all the newbies. Retail buys what looks strong, while institutions sell what they know was planned. Real setups don't start with confirmation, they often start with confusion. Sometimes you see that we have a real good spike to bullish market and we think it's going to go bullish, but then market comes down to its low and takes out all the sell stops. That is the confusion that price create for the retail traders. We as institutional trader, we want to wait for a good entry criteria and then look for entries with good risk management. We don't want to forget the risk management while being on the analysis topic because that is also important. How to trade it? Be patient enough to let the trade form and disciplined enough to wait for the rejection. Now this here is a real lesson for every trader that is starting up. Being patient and being disciplined is only two things that you're gonna ever need in this entire journey until you become profitable and successful, that you will definitely be if you have both of these things. Price is loud when it's lying. Truth moves quietly after the chaos. This thing is very true. Whenever you think that price is going too aggressive or too loud, that is either market is balancing with the relative market, which is good and we can take advantage of this. But most of the time it is because market is laying down some traps for the retail traders, and we don't want to be part of these traps. We want to wait for the real move, the truth that moves quietly and smoothly. Now let's study the order planning checklist. First of all, in a bearish market, we look for buy stops gathered above previous highs, and then we wait for signs of pairing with sell orders. In a bullish market, we look for sell stops right below lows, or observe if new buyers are being created above. Opposing orders get triggered within short time, and then market pulls a temporary imbalance. Now this imbalance is our invitation that price is going to give us nice opportunity to target the opposing side stops. After that, spike confirms the rejection, and then momentum of aggressive moves fades. All the retailers are now crying that why did they execute the Fed, but we are still waiting for the right position. Most of the time, we as institutional trade do nothing and watch the price move. That's how we get the thinking mentality, not the executing mentality. Price then returns to origin or breaker, and then it gives us nice opportunity and entry only after imbalance shows intention, not confusion. Because once price has returned to breaker, now we are expecting intentions, we are not expecting confusions. When both sides feel confident, one side is the setup. All of this can be compressed into 4 steps. The very first one is the formation of trap, and then we look for the liquidity creation. Once the liquidity has been created, we wait for price to take out that liquidity with a sudden spike. Now this spike is what we call the order pairing. And then we wait for it to reject, and then in the last step, we strike when price is showing the intentions. Now let's look at a few examples. The very first one is USD Daily Chart. You can see here we are in a bearish market and price has taken this high right here, you see, and that is our drawn liquidity. By this sudden spike right here, price took this high, and now the breakout and continuation traders are expecting price to go higher and take support from these candles. While we as institutional traders, we know that market has been bearish and it's want to continue. That's why it's going to get some buy side liquidity and then continue toward the sell side liquidity. So if you focus carefully, we are taking the high right here, and all the traders that went short from these levels or these levels, all of they have put their stop loss above this level or this level. Now price want to take this high and gather all the buy stops to have the fuel to go to other sell side liquidity. Now this step, when price is gathering all the buy stops, during this step price is also doing the order pairing. It wants to pair these orders with this one. Take the buy stops and pair them up with the sell stops. That's how the algorithm works. We also have a weekly fair value gap level here, which is also a good confidence that price want to go lower. You see these rejections, and on lower time frame, price also offered us entries. Let's move on to the forward chart. You see here, this is really good move. We have relatively lows right here, a low here. Price is doing the order pairing again and again. We are taking the buy stops from this level and we want to gather them up with the sell stop to this level on the higher time frame. But on the lower time frame, the same thing is also happening. Price wants to keep creating the fuel and keep repeating the cycle. So it gathers the buy stops again and again by creating the liquidity and then pair them up with the sell stops. That's how it moves toward this sell side liquidity. You see right here as well. Each time when price takes some buy stops and pair them up with sell stops, that process is called the order pairing. We are taking the buy stops, pairing them up with the sell stop. This is in the bearish market. But in the bullish market, we take the sell stops and pair them up with the buy stops. That is how algorithm works. That is how algorithm have the fuel to go toward a specific level. Now if you focus in each and every order pairing process, we are getting some kind of entry right here, here, and here. Price wants to give the entry to institutional traders so that they can make profit while trapping the retail traders above these highs. They think price going to reverse, but we know that price has reversed from this level and it wants to go lower. Right here you see this bearish order block. Once again here, here, and here. All of these were entries for institutional traders. They were stacking their positions and making tons of money from these levels alone. The single concept, if you are confused with liquidity, can clear all your doubts. Another example, this is pound yen daily chart. First of all, let me give you the context of where we are coming from and where we are going. So we are coming from this daily bullish order block after price rejected this candle and then closed above the body of this candle right here. You see, there's a good indication that price wants to go higher, and we have clear drawn liquidity right here as well, these swings, and that's what drawn liquidity. So it's a bullish market once price hits this level and closes above this candle right here. You see, so let's move on to the lower time frame and see if we can find the examples of order pairing for the bullish market. Here we are on 4-hour chart. I have shifted the levels from daily chart to 4-hour right here. This is a daily bullish order block, and this is our nearest buy sell liquidity, to which we are going to pair the sell stops after getting them from these lows. Right here, you can see these swing lows and this swing low. Below these swing lows, price is getting the sell stops. Now these sell stops are going to be paired with the buy stops above the highs, just like this one, and this one. So this is sell side liquidity that is going to be paired up with the buy side liquidity once we hit the key level. If you remember, I told you in the trap cycle slide that the spike that excited you is not always your trade. It is actually a trap led down to bull the trade. And you can see that right here. That's a huge candle. It's a good spike. And this spike is not our trade. But retailers, they are selling this candle. They are constantly selling this candle, putting their stop losses above this high. Because this is support, equal highs. That's good support for them. But for us, it's a buy sell liquidity that price is going to take after hitting this key level and getting the sell stops. We trap the retail traders with this candle and these highs right here and gather their sell stops and then pair them up with the buy stops above the highs and real drawn liquidity. So that is our bullish order block that price gives us nice entry from right here, you see, and here. On lower time frame, this is also an entry. This is our market structure shift, which confirms that price is going to go higher. On the 60-minute chart, it looks more beautiful. We have gathered the sell stops right here, and we are going to pair them up with the buy stops right here and here. This is good market makeup buy model. We have did the market structure shift, and we have forward bullish order block inside daily bullish order block. This is real high probable, and that spike is a trap. We want to remember that. Most of the time, whenever you see the spike, just like this one, inside a key level, that is actually a deception to trap the retail traders. And we want to wait for these entries. You see, these are really good. Now, if you look carefully, you'll see that we are also doing the order pairing on the lower time frame. This was based on higher time frame, 4-hour chart, and on lower time frame, the daily chart. Right before price gave us nice opportunity with this bullish order block, price did the order pairing with this swing right here. You see, we have collected the sell stops and we are going to go pair them up with the buy stops above this high, collecting all these failure swings. Price gave us nice opportunity with this bullish order block and fair value gap, and then it shoots higher. Our very first entry, this was here that I told you on the 4-hour chart, the lower time frame entry. The second one right here, third one, fourth one, and so on. Every time whenever there is an order pairing process, price gives us nice opportunities on that specific time frame. And on lower time frame, there are even more opportunities by completing the lower time frame order pairing process. Now that you know the concept of order pairing, The liquidity should be real easy for you. All you have to do is in the bullish market, you wanna gather the sell stops below the lows inside a higher time frame key level when price shows these spikes. Once the sell stops has been gathered, you want to pair them up with the buy stops right here and here. That's it. And then wait for entry. Take your entry with a good stop loss below the swing and then target the buy sell liquidity. That is for the bullish market. For the bearish market, you want to wait for price to gather the buy stops above the highs and then pair them up with the sell stop below the lows. While doing that, you want to see that price gives us nice opportunity and execute with a good risk management. Now that we are done with concept of order pairing, let me introduce something from my private community. This is called 3-minute psychology session for the public. For the private community, it's longer than that. In this section, I'll give you the psychological mindset traits that you are gonna use to understand the order pairing even better and avoid the traps and deception of markers. This is first time you're gonna see anyone do this online. So let's start off with the very first topic. What looks like direction might just be the deceptive collection of buy stops or sell stops. This is actually the illusion of intent. You see price pushing one way, your instinct locks onto it like it's a confirmation. That's the illusion. You take your instinct like a confirmation, thinking the market owes you continuity just because it showed momentum is a foolish move. We are wired to trust momentum. That's our brain. But order pairing is about resisting the instincts to assign meaning too early. Most traders don't lose to the market. They lose to their own imagination what I should do, what it should do. In these setups, the true trap is your own assumptions, what you think is going to go happen. Because we as institutional traders, we want to react to price. We don't want to predict the whole move of price or the whole leg of price based on our own thinking. We want to see what is happening, and based on that data, we look for the levels that look interesting to the algorithm and us. The market doesn't need to go up, it needs to fill both sides first and then look for the direction and then we look for the entry. Feeling the need to act faster, that's the trap talking. That's the urgency reflex. This setup exposes the core emotion that wipes out most traders, which is urgency. I need to do it right now. I need to execute. I need it right now. That is the urgency that most of the gamblers have. We are not gamblers. We are institutional traders. We think before executing. That is what makes us different from them. We have passions that don't. The faster you want to act, the more likely you are acting from fear, not conviction. It's the psychological pressure of missing out that drives early entries. And these early entries, most of the time, they are losses. Order pairing isn't about speed, it's about precision. But precision demands one thing that matters the most. That is patience. And passions feel like weakness when everyone else is already in a trade. You think that everyone is taking profit out of the market? Why should I stay silent? I want to execute faster. That's the weak mindset. You want to change it to I'll execute when I'll get all the confirmation. I'll only execute when market gives me clear opportunity. I don't want to fall in confusion. I want to fall in most probable trades. What you don't want to do is confuse movement with meaning. Because that is the mistake most of you do. Whenever you see the movement or momentum, you want to know the meaning. Why price is doing this? If price is doing this, there must be a meaning. There must be a reason. But most of the time, when you see a sudden spike, that is actually a trap price let down for the retail traders. Structure is silent. Emotion, that is the loud. After a stop run, there's often a moment of stillness when price is doing nothing. That's when your brain screams at you. telling you to act, to chase, to not miss that move. But silence is where clarity lives. The market whispers truth in the moments where your emotions shout the loudest. And you know what? This concept that we just studied, the order pairing, it teaches you to be comfortable in that silence when price is doing nothing. That is what this do. We want to wait for buy stops and sell stops and pair them with each other. That discomfort isn't a warning, it's a test that you feel when price is in stillness, it is in confusion, it is in consolidation. That's a test. And most traders, they fail because they misread stillness as indecision. They want to change their decision fast. The loudest moment in trading is one just before the truth. Profitable perfect setups don't feel urgent, they feel clear. You want to execute these trades. Your mind says, this is pretty much clear. Why would I miss this? While the imperfect or unprofitable trades, they give you the sense of urgency. They are like, execute me right now. You don't understand it, but this is profitable. Your mind is in confusion. But when the setup is profitable, you see it clearly on the chart. This is called the waiting threshold. Psychologically, the hardest thing is not to wait, is to keep your belief system stable while you wait. Waiting feels like losing time, like falling behind. That's a trap itself. The market knows this. It pulls in delay to break you before it pays you. That's its rule. So as I said, the setup matures when your fear of missing out dissolves. That's when clarity enters. Auto pairing setup requires emotional neutrality, not constant anticipation. Now, in the auto pairing or in the market when we are pairing some buy stops or sell stop together, you want to remember that this isn't about being right. It's about waiting until the market is wrong first. And once the market is wrong, it lies, you want to punish that lie. You are not predicting, you are reacting to a clean trap. You want to avoid that. The deeper psychological game is the attachment. You are not here to be correct, you are here to be composed, to watch beliefs collapse in the market and stay silent until structure proves truth. And the truth is what we want to follow. In auto pairing, we react with logic after emotions has been milked out of the others. There is no perfect entry, but only a perfect condition. You either wait for it or become part of the trap. That's the true nature of market. There are millions of minds out there, but your mindset makes you unique. And I want to sharpen that mindset of yours. I want you to make better at this game. If this level of detail and mindset resonates with you, this is just a slice of what we do inside my premium community. Every model, every setup, every psychological block, we break it down right there. I send the voice notes, video lectures, even some messages that define how you should think, how you should have your mentality at the peak at the 1% level. No hype, just structure, timing, and real precision. That is what we do inside our premium community, the MOHSIN-ICT private. This was all about this video. Hope you liked it. Hope you enjoyed the psychology session. If you have any confusion, you may ask in comment section. Stay safe, stay sharp.